Bannister, head of institutional equity strategy for Stifel, called for stocks to bounce back aggressively just before the S&P 500 hit the March 23rd low. However, on Friday, the Wall Street veteran said he now thinks the markets are overshot, fueled by a surge in liquidity and low real yields. Personally, this week I took some profit off the table to save for a rainy day. For those of you who are interested, I sold some of my Berkshire B stocks. I continue to hold my tech stocks as they continue to reach for the heavens. And in other news, a new survey commissioned by TD Ameritrade found that out of the 2,000 young millennials surveyed, about 39% are in the process or have already moved back home because of the crushing economic downturn. Maybe some of you already know that. About 15% of the respondents said they're on financial life support with their parents helping, while another 15% said their parents are covering all rental expenses. And today, Friday, we had good news on jobs. To some, that may be bad news, as the odds of more imminent money printing has been postponed. Additionally, the delays in another stimulus plan seem to have sparked Friday's biggest drop in Nasdaq in almost 3 weeks. And with that news, let's take a look at the Nasdaq Index. But before we do, one small chart. Have you heard the saying, I'm so bearish that I'm bullish? Well, it comes from the pattern that with minimal growth, we get maximum liquidity. And from that, we arrive at maximum bullishness. And while not directly caused by it, as this chart shows, it's worth recalling that the top 5 stocks are now a record 23% of the S&P 500, and that surpasses even the peak during the tech bubble. And so now we're taking a look at a 10-year weekly chart on the Fidelity Nasdaq Composite Index tracking stock, or the 1Q. For disclosure purposes, I do not hold any shares of the 1Q, but I do hold tech stocks, as you perhaps may know. Going all the way back to 2010, we've had one hell of a ride all the way up to the current top here at 428.87. Now, we've had a few bumps along the road here, and of course in March here. But subsequent to the March low, we've had a very good rebound, again, all the way up to the top here. Now, I'm looking at the Nasdaq because it's done a spectacular job of rebounding from the March low all the way up here. Nice V recovery. Back here, we had a V here on the way up. We kind of had a couple of V's here and perhaps in there, but nothing like the current one. And this has been so steep and sharp that it's made me nervous. So that's why I'm taking a little bit off of the table. Now I'm taking my Berkshires off, but not my tech stocks. And some of you may know that I'm not taking my tech stocks off because I have some options written on those that expire early 2021. So I have some downside protection. But at this point, they'd be taken away from me. I'm not too concerned about that because I can always find a deal. Moving on down here into the volume. Volume looks fine. Definitely calmed down from that point there. We're roughly in this area here, still a little bit above normal, but fine. Now, where I do find some issues with the oscillators is beginning here with the MAC. You can see that the fast line is all the way up there at 20.86, the slow line at 15.21 at that level there. There's definitely a big gap between the fast line and the slow line, which means we perhaps do have some more time on the upside. But at these nosebleed levels, I'm just getting a bit nervous. Down here into the histogram, you can see the same thing. From that bottom there, we rocketed all the way up here. So the pendulum has swung from negative to positive, but stock market gravity, I think, is going to take hold soon enough. Moving down here into the price rate of change, again, from that maximum low to this maximum high, we have come off. There is a bit of a reflection, the fast line reflecting off of that slow line here, but I just don't think it's going to last up at these levels for too long. here into the relative strength. This is one of my problems. This top here and the current level here. That negative divergence, somewhat similar to that negative divergence there, and perhaps other negative divergences that you can see there and then there. Those are not good to find. Moving on down here into stochastics, it looks fine. It looks like it is perhaps in the early stages of rolling over, but I think there's still a little bit of time. But you know me, I'm always early. Into the Williams, we can see that from the bottom, we've come up here and we've done some sawtoothing up here in that overbought territory. But it does look a little suspicious to me, perhaps a little bit of a rolling over of the Williams. So another sign back up here to the price chart. One last look. Again, I'm just a little nervous and I'm trying to be cautious and patient, and so should you. So for today, that's ChewDog Charts. Thank you.